Good afternoon and welcome to Business Daily on Som TV, the pulse of the nation. I am Abraham Minor Joda. I will be exploring the latest news, trends and insights that shape our economy. From market analysis to industry updates, we will bring you the stories that matters. So join the conversation and stay informed with Business Daily on Som TV. You can watch us on Facebook at Som TV and on YouTube at Som TV Live. And we're broadcasting from the heart of Nigeria. We bring you stories of progress, resilience, and opportunity. And remember, Taraba State is open for business with vast untapped resources, a youthful population, and a government commitment to reform. We invite investors from around the globe to discover the potential of Taraba, nature's gift to the nation. Here are some of the headlines for the business news. Nigeria in talks to re-enter JP Morgan Bond Index. Nigeria's carbon market policy to unlock $2.5 billion in investments. Aliko Dangote, Sunil Mittal join World Bank Private Sector Investment Lab. Nigeria records $15.2 billion net FX inflow in Q1 2025. Now the news. Enter its government's bond index, a move that could signal renewed investor confidence in the country's foreign exchange regime. The development was disclosed by Patience Oniha, Director General of the Debt Management Office, during an investor engagement session in Washington, D.C. Nigeria was removed from the index in 2015 due to changes in forex policies that led to concerns over capital controls. A return to the index could boost Nigeria's credibility in global capital markets and potentially unlock billions in passive investment inflows. It will also reflect positively on the central bank's efforts to restore order in the FX markets. Sources suggest that Nigeria could attract up to $2.2 billion in immediate portfolio inflows if re-included in the index, with re-entry potentially happening before the end of the year. The International Monetary Fund (IMF) has urged Nigeria to adopt prudent fiscal policies and ensure efficient resource allocation to foster economic stability. Speaking at the 2025 IMF World Bank Spring Meeting, IMF officials emphasized the need for discipline in government spending, boosting revenue through improved mobilization efforts and scaling up spending in key areas such as social protection and investment. The IMF warned that Nigeria must prioritize fiscal resilience, reduce public debt, and rebuild fiscal buffers to withstand economic shocks. Officials also highlighted the importance of strong fiscal institutions and solid public financial management systems to guide economic adjustments and minimize uncertainty. With the global economic uncertainty on the rise, the IMF's recommendation aims to help Nigeria maintain sustainable economic growth and stability. President Bola Ahmed Tinubu has announced that Nigeria's newly finalized carbon market activation policy is expected to unlock up to $2.5 billion in high-integrity carbon credits and associated investment by 2030. This policy positions Nigeria as a hub for climate-smart finance on the African continent. Tinubu made this announcement during a high-level virtual dialogue on climate and a just transition co-hosted by UN Secretary-General Antonio Guterres and Brazilian President Luiz Inácio Lula da Silva. The policy is backed by Nigeria's commitment to updating its nationally determined contributions by September 2025. Aligned with the United Nations Framework Convention on Climate Change, Tinubu also highlighted Nigeria's energy transition plan as a roadmap towards achieving net zero emissions by 2060. Requiring an estimated $410 billion in investment, the government plans to launch a global climate change investment fund to blend public and private capital. The risk green infrastructure and finance clean energy solutions. The National Information Technology Development Agency, NITDA, will host a startup consultative forum on April 28 in Abuja bringing together startups, venture capitalists, and ecosystem enablers to nominate members for Nigeria Startup Council. The forum aims to boost stakeholders' involvement in Nigeria's growing startup sector and shape policies that encourage growth and innovation. NITDA invites all labeled startup, verified entrepreneurial and innovation support organizations, angel investors, venture capitalists, and other stakeholders to participate in the event. The forum will serve as an interactive platform for stakeholders to contribute meaningfully to national policies that foster growth, attract investments, and drive digital innovations. Decisions from this forum will form the foundations for inclusive policy development and amplify the voices of Nigeria's tech and innovation community. The Economic and Financial Crimes Commission, EFCC, has alerted Nigerians about a suspected fake land vendor who allegedly defrauded members of the public of over 90 million through the sale of non-existent properties in Abuja. The suspect, Nwobu William Chubuike, was arrested in Abuja for posing as a legitimate land vendor and marketing fictitious plots of land in various areas of the Federal Capital Territory. The EFCC stated the investigation confirmed none of the locations marketed and sold by Chubuike and his agent actually exist. The Commission warned the public to be cautious of such vendors, especially itinerant land marketers operating around the FCT. The suspect will be charged to court once investigations are concluded. This allows come to less than 2 years after the Corporate Affairs Commission CAC uncovered 189 fake companies used to fraudulently secure land allocations in the FCT. The Nigerian Maritime Administration and Safety Agency, NIMASA, has announced plans to commence the disbursement of the several $100 million cabotage vessel financing fund by August 2025. This marks a major milestone for indigenous shipowners who have awaited education and administration. The fund will manage through 12 primary leading institutions, which will conduct risk assessments and ensure that only credible and financially capable shipping firms benefit from the fund. The fund structure will see NIMASA provide 50% of the capital, banks contribute 35%, and ship owners provide 15% equity input. The loans will feature single-digit interest rates and long tenures ranging from 15 to 20 years to reduce financial pressure and enable indigenous operators to compete more effectively on the global stage. The World Bank Group has announced the launch of the next phase of its private sector investment lab, appointing new members, including the World Bank Group President Ajay Banga said the lab will focus on 5 priority areas, including regulatory and policy certainty, political risk insurance, foreign exchange risk, junior equity capital, and securitization. The new members bring expertise in critical sectors such as industry, infrastructure, energy, agribusiness, healthcare, tourism, and manufacturing. Banga emphasized that the lab's work is central to the bank's mandate, helping the private sector to see a path to investment that will deliver returns and lift people and economies alike. Nigeria's foreign exchange inflow reached $15.2 billion in the first quarter of 2025, driven by sustained market reforms and growing investor confidence. According to data presented at the Nigeria Investor Forum, inflows rose to $28.92 billion, while outflows stood at $13.72 billion, reflecting improved liquidity conditions. The net inflow marks an improvement over the same period in 2024, indicating traction in the country's ongoing FX liberalization efforts. The Central Bank of Nigeria attributed the growth to improve and diversify sources of liquidity, restored functioning of FX market, and elimination of backlog and overhang of FX demand. The average monthly FX turnover climbed to $8.1 billion in 2025, up from $5.5 billion in 2024. The CBN direct participation in the market now accounts for only 2% of market turnover, a significant decline from the previous regime. Nigeria's net foreign exchange inflow reached 15.2 billion in the first quarter of 2025, driven by sustained market reforms and rising investor confidence. According to the Central Bank of Nigeria, FX inflow rose to $28.92 billion, while flows stood at $13.72 billion, reflecting improved liquidity conditions. The net inflow marks an improvement over the same period in 2024, indicating growing traction in the country's ongoing FX liberalization efforts. The CBN attributed the growth to improved and diversified sources of liquidity, restored functioning of FX market, and elimination of backlogs and overhang of FX demand. Average monthly FX turnover climbed to 8.1 billion in 2025, up from 5.5 billion in 2024. The CBN direct participation in the market now accounts for a significant decline. The federal government of Nigeria plans to raise between 900 billion and 1.2 trillion naira through the domestic bond market in the second quarter of 2025, a significant reduction from the 1.8 trillion target set for the first quarter. According to the federal government bond issuance calendar for Q2 2025, published by the Debt Management Office, 3 bond auctions will be held in April, May, and June 2025, with 2 bonds offered per month. The DMO's conservative funding approach comes amid a delicate fiscal environment marked by elevated inflation, weak oil receipts, and a record budget deficit. The bonds, which qualifies as trustee-eligible instruments and are tax-exempt for pension and institutional funds, will be listed on the Nigeria Exchange and the FMDQ QOTC Securities Exchange, facilitating active secondary market trading. So the federal government is looking at raising 350 billion from the domestic market. The offer comprises reopened federal government Nigeria bonds with a rescheduled auction date of April 28, 2025 and a settlement date of April 30, 2025. The bonds on offer include 200 billion in the 19.30% FGN April 2029 bond and a 150 billion in the 19.89 FGN May 2033 bond, both with semi-annual interest payments and bullet repayments on maturity. The bonds qualify as approved instruments for investment by trustees and are recognized as government securities under Nigerian financial and tax regulations, providing tax exemptions for certain institutional investors. And the federal government has generated 79.93 billion from the electronic money transfer levy since its implementation in December 2024. According to data from the Federation Account Allocation Committee, the revenue for EMTL available for sharing between January and March 2025 totals 39.93 billion, representing 56.80% year-on-year increase from 50.97 billion in the corresponding period of 2024. The significant revenue growth from EMTL highlights the impact of the new tax on fintech companies like OPay, PanPay, and MoneyPoint. As the government continues to explore new revenue streams, the EMTL is expected to contribute substantially to the nation's coffers. The Nigerian Insurance Reform Bill awaiting presidential assent aims to enhance consumer protection by establishing a compensation fund for victims of liquidated insurance companies, according to Kunle Ahmed, chairman of the Nigerian Insurance Association. The bill also sets up a fund for uninsured road accident victims, addressing recent industry occurrences and enhancing trust in the insurance sector. The bill reflects increased capital requirements expected to lead a stronger insurance company that can develop new products and address consumer pain points. Ahmed commended the Inspector General of Police and the Commissioner for Insurance for their commitment to protecting Nigerians on the road through the enforcement of third-party auto insurance. The Minister of Finance and Coordinating Minister of the Economy, Wale Edun, has announced that a forensic audit of the Nigerian National Petroleum Company, NNPC Limited. Edun made this statement during the Nigerian Investor Forum held alongside the International Monetary Fund and World Bank spring meetings in Washington, D.C. The audit aims to understand past transaction and reconcile payment arrears, with NNPC expected to increase oil production and revenue to the Federation. The development comes amid calls for transparency in NNPC's operations, investments by 2030, and post-crude oil production. And Nigeria Coordinating Minister of Economy has also announced that the government is aiming for a 70% annual growth trajectory driven by substantial investment and ongoing economic reforms. Edo stated that the country has already achieved its fastest growth rate in years, with a 3.84 growth rate recorded in the fourth quarter of 2024. The minister emphasized the government commitment to maintaining this momentum through strategic measures, including the removal of fuel subsidies and market-based petrol pricing. He also highlighted the stabilization of the naira and improved foreign exchange flows, which prioritize statutory payment and address revenue challenges posed by the oil price slump. Now that is the end of Business Daily for today. But before we go, here's a recap of the headlines. Nigeria in talks to re-enter JP Morgan's bond index. Nigeria carbon market policy to unlock $2.5 billion in investments. Aliko Dangote Soyi Mita join World Bank Private Sector Investment Lab. Nigeria records 15.2 billion naira net FX inflow in Q1 2020. Thank you for joining us on the Business Daily. Until next time, stay informed, stay ahead, and we'll see you on the next episode. You can watch us more on Facebook at Sun TV and on YouTube at Sun TV Live.